So what am I doing to protect and prepare for a possible scenario like this? Well, not much really, because I've been preparing for many years, and yeah, just keep plugging along. That's I think the best thing to do. Don't try to be too cute, and be careful with counterparty risk. That will be something that is gonna flare up, I think. Tuesday, September 26, 2023, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at whether we are entering uncharted waters. And that's not just in terms of our economy, society, but also the financial markets, the monetary system, the whole shebang, I would say. And of course, I've been following these factors for many years, since the mid to late 80s, actually, when my interest in markets, economics, international relations started really picking up. And it has been something that I've followed for many decades. So yeah, that's what we're going to look at today. I don't profess, of course, to have a crystal ball. I try to look at the past, look at what we've done also in the present and the immediate past, and try to look at what the consequences of not just our own individual actions are, but the actions of the people who are supposed to be our leaders, right? So that's what we're going to look at today. And we're going to look at Black Monday back in 1987 and why I think that's significant. But before we do, just wanted to let you know, I was contacted by Oliver Temple of Gold Investments. Gold Investments, they're one of my affiliates. They're a UK-based bullion dealer, gold and silver dealer. They've been around since 1981. I first dealt with them in 2002 with Oliver's father, Mike Temple. But anyway, they have a special from midday today, UK time, for about a week for now. And you get 5% off sovereigns. Yeah, 5% off sovereigns, but only the various dates sovereigns, not the new sovereigns. But it's still a great deal, I think. And all you need to do is use the promo code Maneco64 SOV, S-O-V. And yes, if you're not in the UK, you can still try to buy sovereigns from Gold Investment. He will ship anywhere around the world. You can try it. But for my UK viewers, why are sovereigns, and also Britannias, but we don't have the special on Britannias, why are they so important in my opinion? Well, because everything is very unhinged, I think, at the moment, but has been, in my opinion, for many decades. And as I said earlier, I think we are in uncharted waters, and a little bit of gold and silver, I think, will go a long way. And in the UK, the other interesting part about sovereigns is that they're capital gains tax exempt. And why is that? Well, because they're still considered currency, coin of the realm. Technically and legally, the sovereign still has a face value of £1. So back to uncharted waters. And there's a lot of indicators out there that are very worrying, especially in the bond market. And many of you know that I've worked in the bond market I worked in the bond markets for almost 30 years. And the last almost 15 years now have not been normal, ever since 0809, when they started really ramping up the money printing to buy bonds, to keep interest rates low. We've seen, a bond market that is not normal. We had zero rates. We had even negative rates, which basically mean that money, capital has no value, that things, never end, that you can borrow as much as you want. And it's created so many problems. And we can go back also to 1987 as well, as I said earlier, and the Greenspan Put, and what happened in 1987, and why do I think it's so significant? Well, I think it was the first seed planted in this era of where everyone expects the central banks to come and save them. And it started with Greenspan. He'd just taken over as the chairman of the Federal Reserve back in 1987. And the stock market, the Dow dropped 508 points. It was the largest one-day drop by percentage in the index. It still is 22.6%. So Greenspan came in and liquefied the markets. He intervened. He provided liquidity, and it was after this crash as well that the Federal Reserve, the Treasury, the CFTC, the SEC, the president, they all got together and created the Plunge Protection Team, or the President's Working Group on Financial Markets, something like that, to always be on the lookout for troubles in the markets. And that's why we've seen the everything bubble, because every time there's been a problem, these people have come in and they've provided the help for Wall Street, and they've been doing it for ages, of course. And now, though, with what interest rates are doing, and many people are kind of expecting that this is it. Interest rates are not going to go any higher, even though the average 10-year yield is around just above 4%, the Treasury yield historically. And that's despite the fact that we were below near zero, or just below 2%. For over a decade. I think a lot of people are expecting that something is going to give, and then the Fed, the Treasury, this PPT structure is going to come in again and save the day and keep this everything bubble going. And yes, there's a possibility that they do that. The only problem with that is if they do that, it could be the end of the dollar, even though if they don't do that, it could be the end of the dollar as well. So they're damned if they do, damned if they don't. That's the way I see it. And of course, I could be wrong. And that's why I'm saying we're in uncharted waters. I see a lot of people out there hoping that the stock market crashes, so the Fed will come in and actually pivot and buy all the bonds again and drive yields back down to 1 or 2%. But I'm not too sure they're going to do that. I have a feeling this time it could be different. And aside from that, there's a lot of things out there as well, outside the markets, that point to me that people are losing faith and confidence, not just in the Fed, but in the people who are supposed to be in charge of the United States structure. And by that I mean the executive, Congress, the House, and the Senate. And why do I say that? Well, we've seen since 2011 all the troubles surrounding debt ceilings. Yes, they're resolved eventually. But I think foreigners are starting to get tired of it. So the faith and confidence, I think, is dwindling. And the other thing that I see is the division amongst the populace in the states, in the United States. And that's also, of course, happening here in the UK and everywhere else, I would say. And that doesn't help. And then internationally and geopolitically, we're seeing the same. I listened a little bit to the Russian foreign minister's address to the United Nations recently. And I mean, for him to go up there and call the West the empire of lies, am I mad at him or criticizing him? No. What I'm trying to say is that that's not a kind of thing that people say in those diplomatic institutions, especially a diplomat that Lavrov is supposed to be. So what I'm trying to say, there's a lot of division. There's no cooperation either internationally, domestically. So the world is really in chaos, I would say. It doesn't seem like it. Of course, it's a beautiful day today. Rudy and I have been for a walk, but I think that's what's happening. And there's a lot of symptoms out there of this chaos. And it's not all over the place, though, but you watch some YouTube videos, not just in the US, but here in the UK, people going into major cities and towns and everything is boarded up. A lot of homeless people. Yes, and despite that, our governments are taking more tax than they have in 70 years. Our economies are basically stagnant. The only reason they show positive GDP growth is because government is spending like out of control. We're running deficits that are akin to periods of deficits during wars and pandemics, and we're supposed to be in a normal economy. So that's why I think things are, we are in uncharted waters. And I think the big hope here of a lot of people is that they're going to come to the rescue again. And they could very well do, but I think we need to be prepared for if they don't. And I would say personally, for me, and it will be different for everyone, and you have to do your own homework. I'm not here to try to tell people what to do, but I'm just trying to tell you how I think and what I see coming. Being outside this whole financialization system is key. And by that, by being outside, I don't mean totally, because some of you might not be able to be totally outside, but you need to have a foot on the other side. And what's the other side? Well, I think it's a much more sober world, a real world where value is real, where you live within your means, where you try to deal more with your local community, you help each other. And it's a world where the stock market is left, and the financial markets is left to the experts, so to speak, to the professionals. I think ever since 1987, we've become more and more financialized, and we watch the markets more and more. I guess I'm a victim of that, even though I did work in the markets. We trade things. People try to make a killing. They want to be in the next thing so they can stop working and producing. So I think in a way it will be a blessing in disguise. But as I said, it's uncharted water, so I don't know how things are going to be. It's going to be, and I think we're entering this period. And why? Well, I'll show you a few charts now. The first one is John Exter's inverted pyramid. And this is the liquidity pyramid. And John Exter, who worked for the New York Fed he worked for the Federal Reserve System. He helped found the Central Bank of Ceylon, which is now Sri Lanka. He founded the Central Bank of the Philippines. He became a gold bug, though, in the 1960s because he realized that things weren't going the right way. And his inverted pyramid liquidity This is when everything implodes. So it starts with the derivatives and the unfunded liabilities, as you can see here, non-monetary commodities, private business, real estate, corporate and municipal bonds, securitized debts, listed stocks, and then the money flows into government and treasury, government bonds, treasury bills. And this is where it's interesting, because in the past 36 years, ever since the Greenspan Put was baptized or christened or brought into the world, the government bonds have always been a safe haven in times of trouble, because the Fed goes into the market and buys these to liquefy the system. And that's driven interest rates up until recently to zero, in some countries into negative. But now this is all reversing. And I have a feeling that the liquidity in the treasury market is, yeah, as we've seen, there are worries about liquidity. And I think that's where we're going. You go into paper money. Paper money, of course, is losing value because of the rising cost of living, because of the fact that they've debased the currency so much. But the problem with paper money is that, and I made a video about that, there's only half a cent of paper money on deposit on average in American banks. So it could be a mess. You could think that you have money, paper money in your account, but you don't. And it could be a rush. It could be a mess. It could bring everything down. So what's at the bottom of the pyramid that's solid and can't be destroyed? Well, it's gold and silver. And John Exter knew about that. And that's where we could be right now. We could be in the process of seeing this liquidity pyramid unravel. Is it any wonder or surprise that Janet Yellen last week said they're worried about liquidity? They're going to start doing some kind of like de facto yield curve control by buying back bonds next year. We could be. And volatility as well. As you can see here by the VIX chart, which I tweeted about yesterday, it's at real lows here, and it's starting to pick up. And volatility increases, liquidity decreases. They're inversely related. And the other two charts I wanted to show you, which are really interesting, and for some reason I never really looked at these charts. But the first one is the price of gold versus the T-bond future, which is the long bond futures. Futures that's based more on the 30-year bond, and that's the original bond future that I think was created in 1977. But as you can see, ever since the beginning of the century, yes, there's been a correction from around 2012 to around 2016. But the trend is higher. That means the price of gold is outperforming the treasury bond, the T-bond. And of course, it's also outperforming the 10-year treasury note. So this shows me that the safe haven is not, of course, fiat currency government bonds, but real money, gold and silver. And as you can see, this is a monthly chart, but it's really accelerating, especially here for the long bond. And I think that's a bad sign. And as I said, I could be wrong. They could come in and save the day. But if they do, you could see this go up even more. This gold versus bonds and T-notes ratio. And why is that? Well, because if they come in and save everything, they'll have to do more QE than they have ever done before. And that's going to put a rocket up gold and silver. And if they don't, everything collapses. Well, you're still fine. You still have money outside the system. There won't be much paper money out there because they haven't, as I said, there's very little in the banks. It's all been invested in risky assets that are losing value. So that's how I see things. With that, let's quickly look at where the markets are this morning. It's 10 to 9 a.m. We're a little later today, Rudy and I, but we got spot gold at 1912.50. That's down about $3. High's been 21, low is 09. Yeah, silver is having a tough time, but we're still within that triangle. It's down 16 cents, just below 23. High's been 18, the low 22.83. So the stock market, the Dow futures is down 183 points. The NASDAQ 100 future is down just under 100 points. And the S&P future is down 27 points. So we're down about 0.2%. The volatility index is up about 3% this morning. The VIX index. Need to keep an eye on that. To the currencies, sterling is down a third at 121.71. The euro is unchanged, just below 106. And the dollar continues to rise against the yen. We got up above 149. I think that's another problem as well. The Japanese central bank might be tempted to sell a lot of the treasuries that the Japanese hold in order to protect the yen. But right now, they're letting the yen go. The higher this rate goes, it means the weaker the yen is, the stronger the dollar is. What about the Chinese yuan? Well, that's pretty much unchanged. It's at 731. Let's look at the dollar versus the ruble. That's unchanged as well, just trading around 96. Not much to report there. To the other currencies, the Aussie dollar is down a third, trading just above 64. The dollar is up a third versus the Canadian dollar at 134.99, or is it the Canadian Reichsmark? Some of you might get that joke, some of you might not. The Kiwi dollar is down just under 1/3% at 59.49. So let's look at the commodities. Yeah, and commodities are on the back foot because of what's happening with all the risk off. But long term, I still think they're going to do relatively well against the everything bubble assets. So WTI is down 1.2% at 88.20. Brent is down 1.2 at just below 91. And platinum, that's down $6, trading around 907. High grade copper is down 0.2% at 365. So let's quickly look at the 10-year yield. That's something I would say people in the markets should be looking at, and I think a lot of people are, but not everyone. We are at 453.5. It's down 1 basis point. We made a new 16-year high overnight, just around 457. So with that, I'm going to wish you all a very good day. Take care. Bye.